Good evening, everyone. Thank you for joining me today as we dive deep into what may prove to be one of the most consequential pieces of healthcare legislation in recent years. The Lower Healthcare Premiums for All Americans Act has just been introduced in the House of Representatives, and what makes this moment particularly significant is the context in which it arrives. The Senate has now rejected two separate attempts to address the expiring subsidies that millions of Americans currently depend on to afford their health insurance. We are standing at a critical juncture, and the decisions made in the coming weeks will directly impact the financial security and health outcomes of families across this nation. Let me start by painting the picture of where we are right now. The enhanced premium subsidies that were expanded during the pandemic are set to expire. Without action, the Congressional Budget Office estimates that approximately 3 million Americans could lose their health insurance coverage. 4 million more, premiums could increase by hundreds of dollars per month. We're talking about real families, real people who have built their household budgets around the current subsidy structure, suddenly facing the prospect of unaffordable insurance or no insurance at all. The Senate's failure to pass two previous attempts at addressing this crisis tells us something important about the political dynamics at play. There is deep disagreement not just between the parties, but within the parties themselves, about how to approach healthcare reform. Some senators wanted a clean extension of the existing subsidies. Others wanted reforms attached. Some were concerned about the cost to taxpayers. Others prioritized coverage numbers above all else. The result has been legislative gridlock at precisely the moment when certainty is most needed. Now the House Republicans have introduced their alternative vision, the Lower Healthcare Premiums for All Americans Act. This legislation represents a fundamentally different philosophy than simply extending the subsidies that are about to expire. The GOP approach focuses on three main pillars: increasing price transparency, expanding health savings account options, and allowing insurance to be sold across state lines. They argue that these market-based reforms will drive down costs more sustainably than government subsidies, which they view as temporary patches that don't address the underlying reasons healthcare is so expensive in America. Let's talk about what this bill actually proposes to do. First, it mandates that hospitals and insurance companies publish their actual prices for services. Right now, if you need an MRI, it's nearly impossible to know what it will cost you until after you've had the procedure and the bills start arriving. Different hospitals charge wildly different amounts for the same service. The same insurance company might negotiate different rates at different facilities. This bill would require all of that information to be made public in a searchable, standardized format. The theory is that when consumers can see prices up front, they can make informed decisions, and competition will naturally drive prices down. The second major component expands the use of health savings accounts. Currently, these accounts come with restrictions on who can use them, how much can be contributed, and what they can be spent on. The new bill would significantly increase contribution limits, allow more flexibility in spending, and make these accounts available to people regardless of what type of insurance they have. Republicans argue this puts more healthcare decisions and healthcare dollars directly in the hands of patients rather than insurance companies or government bureaucrats. The third pillar allows insurance companies to sell policies across state lines. Right now, if you live in New Jersey, you can only buy insurance from companies licensed to operate in New Jersey, following New Jersey's regulations. This bill would allow you to purchase a plan from any state. A company operating in South Dakota, where regulations might be less stringent and costs lower, could offer you a policy. Proponents say this increases competition and gives consumers more choices. Critics worry it creates a race to the bottom, where insurance companies all relocate to the state with the weakest consumer protections. So what happens next? The legislative path forward is complex and uncertain. First, the bill needs to make it through the House. Even with a Republican majority, passage is not guaranteed. There are moderate Republicans in swing districts who are nervous about voting for anything that could be portrayed as taking away health care from their constituents, especially when the current subsidies are about to expire. They remember what happened in 2018 when health care became the dominant issue in midterm elections. They know that voters pay attention to health care in a way they don't pay attention to most policy issues, because health care affects everyone personally and immediately. Then there are the House Republicans from the more conservative wing who may feel this bill doesn't go far enough. Some wanted to see provisions to defund certain healthcare programs entirely. Others wanted more aggressive deregulation. Getting everyone in the Republican caucus on the same page has historically been difficult on healthcare legislation. We saw this during the various attempts to repeal the Affordable Care Act earlier in the decade. Republican leadership may need to make concessions to both the moderate and conservative wings to get enough votes for passage. If the bill passes the House, it then heads to the Senate, where the situation becomes even more complicated. The Senate has already rejected 2 attempts to deal with the expiring subsidies. What makes anyone think they'll pass this version? The Senate operates under different rules, with the filibuster meaning that most legislation needs 60 votes to advance. Republicans would need to either get Democratic support, which seems unlikely given the partisan nature of healthcare debates, or they would need to use the reconciliation process, which has specific requirements and limitations. Let's game out some possible scenarios. Scenario 1. The bill passes the House with some modifications but stalls in the Senate, just like the previous 2 attempts. In this scenario, we hit the deadline and the subsidies expire without any replacement. Premiums spike for millions of Americans. The exchanges see enrollment drop significantly. Democrats campaign hard on the message that Republicans let healthcare become unaffordable. Republicans counter that they passed a solution in the House but Senate Democrats blocked it. The political blame game intensifies as the 2026 midterms approach, but meanwhile, real people are struggling to afford their medications and doctor visits. Scenario 2. The political pressure becomes so intense as the deadline approaches that a compromise emerges. Perhaps Democrats agree to some of the transparency provisions and HSA expansions in exchange for Republicans agreeing to a shorter-term extension of the subsidies. Nobody gets everything they want, but the immediate crisis is averted. This would be the pragmatic outcome, but pragmatism has been in short supply in recent years. Both parties would face criticism from their base for compromising, but both could also claim they prevented a healthcare catastrophe. Scenario 3. Republicans successfully use the reconciliation process to pass a version of their bill through both chambers without Democratic votes. The subsidies expire but are replaced with this new market-based approach. In the short term, this creates significant disruption. People who were receiving subsidies under the old system may not immediately benefit from increased competition and transparency. Premiums could still spike in the transition period. However, Republicans argue that within a year or 2, as the new system takes effect, prices will come down below what they would have been with continued subsidies. This is a high-risk, high-reward scenario. If prices do come down, Republicans can claim vindication for their approach. If prices stay high or go higher, they own the entire problem going into the next election. Scenario 4. The bill fails entirely and the subsidies expire with no replacement. This is the worst-case scenario from a policy perspective, though it's not clear which party it hurts more politically. You could argue voters will blame Republicans for not extending subsidies they were already receiving. You could also argue voters will blame the party that created the subsidy structure in the first place. What's certain is that millions of Americans would face higher costs and reduced coverage. Now let's talk about the substantive policy questions at the heart of this debate, because beyond the political maneuvering, there are real disagreements about what approach actually works best. The fundamental question is this: do we reduce healthcare costs primarily through government intervention and subsidies, or primarily through market competition and transparency? Both approaches have evidence supporting them, and both have limitations. The case for subsidies is straightforward. Healthcare is not like buying a television or choosing a restaurant. When you're sick or injured, you often don't have the luxury of shopping around. Insurance is complex and confusing, with most people lacking the expertise to evaluate which plan is actually best for their needs. Left entirely to market forces, many people simply can't afford adequate coverage, leading to worse health outcomes and ultimately higher costs when people delay care and end up in emergency rooms. Subsidies ensure that insurance is affordable regardless of income, preventing that spiral. Countries with more government involvement in healthcare generally spend less per capita while achieving better health outcomes, at least by many measures. The case for market-based reforms is equally compelling to its proponents. They point out that healthcare costs were rising rapidly even before any of the recent expansions of subsidies, suggesting that subsidies treat the symptom rather than the disease. When someone else is paying most of the bill, whether that's the government or an insurance company, there's little incentive to seek out lower prices or question whether a particular test or procedure is really necessary. Price transparency and competition have driven down costs and improved quality in every other sector of the economy. Why should healthcare be different? Making patients more conscious of costs through tools like health savings accounts creates better incentives throughout the system. The truth, as is often the case, probably lies somewhere in the middle. Pure market solutions struggle with the unique characteristics of healthcare. You can't always shop around when you're having a heart attack. Information asymmetry between doctors and patients is enormous. But pure government solutions also struggle. They can lead to long wait times, limited innovation, and the political challenges of managing a massive new bureaucracy. The most successful healthcare systems in other developed countries tend to be hybrid models that combine universal coverage guarantees with elements of competition and choice. What makes this current debate particularly consequential is that we're not just talking about incremental changes. The expiring subsidies mean that maintaining the status quo requires active legislation. Doing nothing is itself a choice with dramatic consequences. This creates both opportunity and danger. Opportunity because it forces Congress to actually address healthcare rather than kicking the can down the road. Danger because the pressure of a deadline can lead to hasty decisions without fully considering long-term consequences. The transparency provisions in the new bill are probably the least controversial element, at least in principle. Almost everyone agrees that patients should know what things cost before agreeing to pay for them. The devil is in the details of implementation. How do you make pricing information truly accessible and comparable when healthcare is so complex? A hospital might publish that an MRI costs $2,000, but that doesn't tell you what your actual out-of-pocket cost will be once insurance, deductibles, and co-pays are factored in. Making transparency truly useful requires standardizing a lot of information and ensuring it's presented in ways normal people can understand, not just healthcare administrators. The health savings account expansion is more politically divisive. HSAs definitely benefit people who can afford to save significant amounts of money. If you're making a solid income and are generally healthy, an HSA can be a great deal, allowing you to set aside pre-tax dollars for healthcare expenses and even invest the money. But what about people who are living paycheck to paycheck? They're not in a position to maximize these tax advantages. And what about people with chronic conditions who face high, predictable healthcare costs every year? For them, an HSA might just mean paying more out of pocket before any insurance kicks in. Critics argue that HSA expansion primarily benefits the healthy and wealthy, while doing little for those who most need affordable healthcare. The across state lines provision is perhaps the most contentious. On the surface, allowing insurance to be sold across state lines sounds like an obvious way to increase competition. If 5 companies can offer you policies instead of just 2, surely at least one will offer a better deal. But insurance regulation exists for reasons. States have passed laws requiring certain coverages, protecting consumers from predatory practices, ensuring financial stability of insurance companies so they can actually pay claims. When you allow out-of-state insurance, which state's rules apply? The state where the company is based or the state where the customer lives? If companies can choose to base themselves in whichever state has the weakest regulations, you risk a race to the bottom. Insurance companies could offer artificially cheap policies that look great until you actually need healthcare and discover all the exclusions and limitations. Young, healthy people might gravitate toward these cheaper, skimpier plans, leaving traditional plans with only older, sicker customers, which drives up premiums in those plans even further. This is called adverse selection, and it's one of the fundamental challenges in insurance markets. Supporters of the across state lines provision argue these fears are overblown. They point out that states would still have authority to regulate insurance sold to their residents. They note that some states have already tried allowing out-of-state insurance and it hasn't led to catastrophe. But critics counter that those state experiments have been limited and that a nationwide change would be much more disruptive. Let's consider the international context for a moment. The United States spends more on healthcare per person than any other developed country, by a significant margin. Yet we don't have better health outcomes to show for it. Life expectancy in America is lower than in countries that spend half as much per capita. Infant mortality is higher. These facts suggest that simply spending more, whether through subsidies or otherwise, isn't the answer. We need to address the underlying inefficiencies in how healthcare is delivered and paid for. Other countries have found different ways to balance these challenges. Some use single-payer systems where the government directly provides or pays for most healthcare. Others use heavily regulated insurance markets where private companies compete, but within strict parameters designed to ensure universal coverage. Still others use a mix of public and private options. What they all have in common is that they've made a societal decision that healthcare coverage is not optional, and they've built systems that ensure everyone has access regardless of ability to pay. America has been reluctant to make that commitment as clearly or completely. We have Medicare for seniors, Medicaid for the poorest, employer-sponsored insurance for many workers, and the exchanges for everyone else, with subsidies for those who qualify. It's a patchwork system that leaves gaps and creates enormous complexity. The question is whether we fix those gaps through more government intervention or through unleashing more market forces. The timing of this debate matters enormously. We're coming out of a period where healthcare was thrust to the forefront of national consciousness during the pandemic. People saw how quickly healthcare systems could be overwhelmed. They saw how health outcomes were tied to social and economic factors. They saw how many people were just one job loss away from losing coverage. This created, at least for a time, more political will to expand healthcare access. But we're also entering a period of heightened concern about government spending and debt. The subsidies that are expiring cost tens of billions of dollars per year. Is that sustainable? What are we not funding because those dollars are going to healthcare subsidies? Republicans argue that their market-based approach will ultimately cost taxpayers less while still making healthcare affordable. Democrats argue that you can't solve healthcare through markets alone because healthcare doesn't behave like other markets, and that cutting subsidies will simply shift costs onto individuals and families who can't afford them. Both sides have valid points, and both sides are also engaging in some wishful thinking about how perfectly their preferred approach would work. What's frustrating to many Americans is that this debate has been going on for decades now, and we still don't seem any closer to resolution. The Affordable Care Act was passed in 2010, and ever since then, every election has featured promises to either protect it, expand it, repeal it, or replace it. The subsidies now expiring were enhanced in 2021 and extended in 2022, always with the understanding that they were temporary measures. But when temporary measures help millions of people afford healthcare, ending them becomes politically difficult, even if you believe there's a better long-term approach. The question of what happens to the people currently receiving subsidies is not abstract. Let me give you some numbers to make this concrete. The average marketplace enrollee receiving subsidies pays about $100 per month in premiums. Without subsidies, that same person would pay around $500 per month. For a family, you're talking about going from paying a few $100s a month to over $1,000 a month. That's a mortgage payment for many families. That's food and utilities and car payments. When premiums spike like that, people make difficult choices. They drop coverage entirely, or they switch to plans with huge deductibles that leave them one medical emergency away from bankruptcy, or they cut back on other necessities to keep their insurance. The sponsors of the Lower Healthcare Premiums for All Americans Act argue that their reforms will bring premiums down enough that subsidies won't be necessary. But that would take time. Insurance markets don't adjust overnight. Even if you assume the reforms work exactly as intended, there would be a transition period measured in years, not months. What happens to people during that transition? The bill as currently written doesn't include any bridge subsidies or transition assistance. This is a major vulnerability in the legislation and a focal point for criticism. One possible amendment that moderate Republicans might push for would be a 1 or 2 year extension of partial subsidies while the new market-based reforms take effect. This would give the reforms time to work while preventing immediate hardship for millions of families. It would also be expensive and would undercut the free market purist argument that subsidies should end entirely. But it might be necessary to get the bill through the House and to have any chance in the Senate. The role of the insurance industry itself in this debate is fascinating. You might assume insurance companies would oppose subsidies, since subsidies mean government money that might come with strings attached. But actually, many insurance companies like subsidies, because subsidies mean more people can afford to buy their product. What they don't like is uncertainty. The back and forth about whether subsidies will be extended, and the possibility of major regulatory changes, makes it very difficult for insurance companies to set premiums and plan their business. Several major insurers have already announced they may pull out of certain markets if there isn't clarity soon about what the rules will be. If insurers leave, that reduces competition, which ironically could drive premiums even higher, the opposite of what the bill intends. The healthcare provider perspective is also important. Hospitals and doctors tend to support measures that expand coverage, because more people with insurance means fewer uncompensated care costs. When people without insurance show up to emergency rooms, hospitals are legally required to treat them, but often never receive payment. Those costs get passed on to everyone else through higher prices. If millions of people lose coverage because subsidies expire, hospitals will face more uncompensated care, particularly safety net hospitals that serve low-income communities. This creates a perverse incentive where the hospitals that can least afford losses face the biggest impact. Let's talk about the political calculations each party is making. Republicans see this as an opportunity to finally implement the market-based healthcare reforms they've been advocating for years. They believe that if they can pass this bill and if it works even reasonably well, they can take credit for solving healthcare in a way that doesn't involve massive government spending. They can argue they made healthcare more affordable and gave people more control, all while reducing the deficit. That's a powerful political narrative going into future elections. But the risk is enormous. If the bill passes and premiums go up instead of down, if millions lose coverage, if there are heart-wrenching stories of families who can't afford their medications or their cancer treatment, Republicans will own that completely. Democrats will hang every negative healthcare story around Republican necks. And healthcare is an issue where voters hold grudges. People remember who they blame for healthcare problems. Democrats, meanwhile, see this as a potential political gift. They can position themselves as defending ordinary families against Republican policies that would make healthcare unaffordable. They can run ads featuring people who lost coverage or saw their premiums double. They can argue that Republicans care more about their ideology than about people's health. But Democrats also face risks. If they're seen as purely obstructionist, refusing to even consider reforms to a system that everyone agrees has problems, they can be painted as the party of the status quo. And if Republicans successfully frame the subsidy extensions as unsustainable government spending, Democrats may find themselves on defense about fiscal responsibility. The media coverage of this debate will be crucial. Healthcare is complicated. Most people don't understand how insurance works, what subsidies actually do, or what the various reform proposals would change. The public will largely form their opinions based on how the media covers this, and how political campaigns talk about it. Republicans will try to focus attention on stories of premiums coming down due to increased competition and transparency. Democrats will focus on stories of people losing coverage. Both sides will cherry-pick examples that support their narrative. The truth will likely be that both things happen to different people, but which story dominates the news cycle could determine the political outcome. Let me address something that often gets lost in these debates: the moral dimension. Beyond the policy specifics and political calculations, there's a fundamental question about what we owe each other as a society. Do we have an obligation to ensure that everyone can access health care, regardless of their ability to pay? If someone is born with a chronic condition, or develops cancer, or has a severe accident, and through no fault of their own cannot afford treatment, what is our responsibility? Different people answer this question differently based on their values and their understanding of how society should work. Some argue that health care is a fundamental human right, and that a wealthy society like America can and should guarantee it to everyone. Others argue that while health care is important, guaranteeing it to everyone requires taking money from some people to give to others, which they view as unjust, and that mandating how people spend their money on health care reduces freedom. These philosophical differences are real and deeply held, and they're unlikely to be resolved through policy debates alone. What makes this current moment so critical is that we're being forced to make these choices in a concrete way, not just as abstract debates. The subsidies are expiring. Congress must act or choose not to act. Either way, millions of people will be directly affected. The consequences are immediate and measurable. This is not some hypothetical discussion about what healthcare policy should look like in an ideal world. This is about what happens in the next few months to real people trying to afford their insulin or their blood pressure medication or their child's asthma treatment. As we move forward through this legislative process, there are several key indicators to watch. First, how many Republicans in the House actually vote for this bill? If it barely passes or if significant numbers of Republicans defect, that tells you the party is divided and the bill is vulnerable. Second, what do the major lobbying groups do? The insurance industry, the hospital associations, the pharmaceutical companies, the doctors' groups, all of these have enormous influence. Where they come down on this bill will matter. Third, what does the Congressional Budget Office say about the bill's effects? The CBO will score how many people would gain or lose coverage, what would happen to premiums, and what the fiscal impact would be. Those numbers will be debated and disputed, but they provide at least some empirical grounding to the discussion. Fourth, watch what happens in individual states. Some states may try to implement their own subsidies if the federal ones expire. Others may try to preemptively implement some of the reforms in the bill. These state-level experiments can provide real-world evidence about what works and what doesn't. Fifth, watch the public polling. If the bill becomes increasingly unpopular as people learn more about it, that will make Republicans nervous about supporting it. If it becomes popular, that gives momentum. The Senate timeline is particularly important. If this bill takes months to work through the House, and then hits the Senate right at the deadline for when subsidies expire, that creates enormous pressure. Some senators might vote for something they're not thrilled about simply to avoid the chaos of subsidies expiring with no replacement. Alternatively, the deadline pressure could cause everything to collapse because there's not enough time to build consensus. Strategic timing of votes is a key part of legislative strategy. Let me also address what happens if this bill becomes law and is implemented. The transition period would be messy. Insurance companies would need to redesign their plans to comply with new transparency requirements. States would need to figure out how to regulate out-of-state insurance. People would need to navigate a changed marketplace. There would almost certainly be glitches, confusion, and some people who fall through the cracks, at least initially. The question is whether the long-term benefits justify the short-term disruption. If the reforms work as intended, you might see premiums gradually decline as competition increases and people make more cost-conscious choices. You might see innovation in insurance products, with new types of plans that better meet people's needs. You might see healthcare providers compete more on price and quality rather than just on insurance contracts. But if the reforms don't work, you could see insurers race to the bottom on coverage, people getting stuck with plans that don't actually protect them when they get sick, and healthcare becoming even more unaffordable for those with significant medical needs. The global healthcare landscape is also evolving in ways that will affect this debate. Telemedicine has expanded dramatically. New technologies are changing how care is delivered. Prescription drugs, particularly specialty medications, are becoming a larger portion of healthcare spending. The rise of high-deductible health plans has already shifted more costs onto patients. These trends will continue regardless of what Congress does, and they interact with whatever policy choices are made in complicated ways. One aspect that hasn't received enough attention is how this affects young people specifically. Young adults are less likely to have chronic health conditions, so they often see insurance as something they're forced to buy rather than something they urgently need. High premiums without subsidies might push more young people to go uninsured or to choose very minimal coverage. This creates adverse selection problems for the market as a whole. The individual mandate, which penalized people for not having insurance, was significantly weakened in previous legislation. Without it, and without subsidies to make insurance affordable, you could see a significant drop in young adult enrollment, which would drive up costs for everyone else. The prescription drug component is another major factor. The bill includes some provisions aimed at reducing drug costs through increased transparency about pharmacy benefit manager practices and allowing more importation of drugs from other countries. But prescription drug pricing is enormously complex, involving patents, FDA approval processes, international price referencing, and the role of middlemen in the supply chain. Even well-designed reforms might have limited impact without more comprehensive changes. Let me bring this back to the human level, because ultimately that's what this is about. There are millions of Americans who wake up every day worried about healthcare costs. Parents who stress about whether they can afford their child's medication. Seniors trying to stretch fixed incomes to cover Medicare premiums and out-of-pocket costs. Small business owners trying to provide insurance to employees while keeping their businesses viable. People who would like to start their own business or pursue their passion but feel trapped in jobs they don't love because they need the health insurance. People who have delayed care, skipped medications, or rationed their insulin because they couldn't afford the full cost. These are not abstract policy problems. They are daily struggles for a significant portion of the population. Any healthcare legislation should be judged primarily on whether it makes these people's lives better or worse. Will it reduce their financial stress? Will it give them better access to the care they need? Will it give them more choices and more control, or will it leave them more vulnerable and more anxious? The Lower Healthcare Premiums for All Americans Act represents one answer to these questions. The expiring subsidies without replacement represent another set of answers. A compromise that extends subsidies while implementing some reforms would be yet another answer. The choice Congress makes will reverberate through millions of lives. As this process unfolds over the coming weeks, we need to demand honesty from our elected officials. We need them to be clear about the trade-offs they're making, the people who will benefit from their approach, and yes, the people who might be hurt by it. We need them to acknowledge uncertainty. Nobody knows for sure exactly how these changes will play out. Anyone who claims absolute certainty about what will happen is either fooling themselves or trying to fool you. We also need to be realistic about what can be achieved. There is no perfect healthcare system. Every approach involves trade-offs between cost, access, and quality. Every approach creates winners and losers. The question is whether the trade-offs are worth it and whether the overall population is better off. We should be skeptical of promises that everything will be better for everyone at lower cost. It's far more likely that some things will improve, some things will get worse, and we'll need to make difficult judgments about whether the balance is acceptable. The stakes in this debate could not be higher. Healthcare represents nearly 20% of the American economy. It affects every family. It determines whether people can get the treatment they need when they're sick. It influences whether people can retire with dignity or must work into their 70s to maintain insurance. It affects whether people take entrepreneurial risks or stay in corporate jobs. It influences life expectancy, infant mortality, and quality of life in profound ways. So as we watch the House debate this bill in the coming days and weeks, as we see the amendments offered and the deals struck, as we eventually see whether it passes and what happens in the Senate, we must stay engaged. We must read beyond the headlines. We must listen to multiple perspectives. We must think about not just our own situation but about how these changes affect people in different circumstances. We must hold our representatives accountable for their votes and their rhetoric. The healthcare system we end up with will depend on the choices made right now, in this moment of deadline pressure and political uncertainty. The Lower Healthcare Premiums for All Americans Act might become law, it might be defeated, it might be transformed through compromise into something different from what was originally proposed. The subsidies might be extended, might expire, might be replaced with something else. But whatever happens, it will shape healthcare in America for years to come, affecting hundreds of millions of lives. This is not just another political fight. This is about the health and financial security of the American people. It deserves our attention, our engagement, and our insistence that whatever solution emerges, it must truly serve the people it claims to help. Thank you.